Good morning. My name is Corey Hall. I am the founder of Brainchild AI and the creator of Trading Agent AI. And this is part 3, deep dive into stock day trading strategies using the Trading Agent AI. So in today's video, we're going to go over 5 different trading strategies: momentum trading, breakout trading, reversal or mean reversion trading, scalping, and a VWAP strategy. So without further ado, let's get into it. So here we are at the Trading Agent AI home screen. You see I made a little bit of branding updates and stuff as we continue to improve and iterate on the product. So I'm gonna open up a new conversation here, and we're gonna make this super easy because as you remember, this product is specifically designed for traders. So we're just gonna do explain momentum. Explain momentum day trading strategies. And the reason why I do this is because I want you to understand that not only can the agent help you find trades, analyze trades, and make trades and give you trade setups, but it can also explain things to you and teach you as well. So think of it almost as a trading partner slash mentor slash teacher. So core principles of momentum trading is riding the wave. Buy stocks that are moving strongly in one direction, up or down with high volume. Short holding periods. Positions are held for minutes to hours, rarely overnight, because remember, we're day trading. Typically, they're catalyst driven. Trades are often triggered by news, earnings, analyst upgrades, downgrades, or sector momentum. So some key elements of momentum day trading. Number one is stock selection. High relative value. Look for stocks trading at least 2 to 3 times your average daily volume. You'll want to big price moves. Focus on stocks that are up or down 5 or more percent in pre-market or early session. And then you'll want some news catalysts like earnings, FDA approvals, M&A, sector news, R&D projects, acquisitions, things like that. Which M&A is mergers and acquisitions. Number 2 is entry signals. So you're gonna want to look for breakouts. Buy when the price breaks above key resistance with volume confirmation. You're gonna want to look for pullbacks. Enter on a quick dip to support after a breakout if momentum resumes. And then you'll want VWAP reclaim, which VWAP is volume weighted average percentage. Buy when the price moves above, volume weighted average price. So buy when price moves above VWAP after a dip. And then your exit signals are going to be profit targets set based on intraday resistance levels or percentage gains. Trailing stops, use tight stop losses to lock in profits as price moves up. And reversal candles, exit if you see a bearish reversal pattern like a shooting star in a golf or a bearish engulfing. And then always make sure that you have risk management in place. Position sizing. Risk no more than 1-2% of your account per trade, and this is very important. What a lot of traders do is they want to risk based on what they think they are able to gain or what the potential gain is. Your risk cannot be based on what your gain could potentially be. Your risk needs to be based on what you are willing to lose and what you are able to lose. And 1-2% of your account per trade will keep you alive to trade for another day. Risking based off of what you think you're going to gain is the fastest way to blow your account. Stop loss. So always use the stop loss orders below support or recent low, and avoid chasing. Don't buy after a huge move. Wait for a pullback or a consolidation. And the reason for that is, that'll give you an opportunity to see, is this trend going to continue or has it been exhausted? And so some popular technical indicators that people use when they are momentum trading is using the relative strength index, or RSI. So an RSI greater than 70 is overbought, typically meaning that there's potential for some sell off and some reversal or some price decline. And a RSI 30 or under is oversold, meaning that the selling is exhausted. Buyers are likely to step in, and the price is going to go back up. MACD, which is moving average convergent divergence. Bullish crossovers confirm momentum. The stronger the crossover, the stronger the momentum. And then moving averages like exponential moving averages or simple moving averages, or the 920 EMA for short-term trend confirmation. So there's different configurations for moving averages, and some are better for shorter term, some are better than long term. So the 920 EMA is really good for short-term trend confirmation. And then VWAP, which is a key intraday support resistance for institutions. And so above VWAP, it's kind of a bounce off support. Below VWAP is a breakdown below resistance, below support, potentially turning that support into a resistance. And so the agent also provides an example of a momentum trade setup. So find stocks with news and 100% relative value. Watch for a breakout. Wait for a price to break above pre-market high after open. Enter on the volume surge. Buy as volume spikes and price clears resistance. Set a stop loss below the breakout level, just below the breakout level, and then take profits at the next resistance or use a trailing stop. And then actionable steps. Use a stock screener for high volume and percentage gainers. Trade only during high liquid hours, first 2 hours after open. Keep a trading journal to review setups and mistakes. Practice with a simulator before risking real capital, and then there's some further reading resources. But the agent makes this easy, right? So with the agent, we could just do recommend. And we're going to do scan. Trade setups. So we just gave it scan for momentum trade setup, and it did the scanning for us, and it provided us with some tickers that have some big pre-market gains, large percentage changes, high volume, and these have been determined to be some good setups for momentum trading today. So here's the list that we can work off of. And so it gives us a trading action plan. So focus tickers are going to be CTX, TGL, TWG, MTVA, BDRX, FULC, and WVE. So the next steps that is recommended is check for news catalysts like earnings, mergers, acquisitions, FDA approvals, etc., etc. Analyze intraday volume and price action for confirmation. Look for breakouts above pre-market highs or key resistance. And then your technical setup, which is going to be your entry on breakout above intraday resistance with volume surge, stop loss just below the breakout level or recent support. And the profit target is going to be your next resistance or round number levels, 2 to 5% above entry. And the position size is you're going to risk about 1 to 2% of your account per trade. And then the actionable tip is pick 1 to 2 tickers from the list, confirm volume and news, and wait for a technical breakout with volume before entering. And so if you want a detailed technical setup for any of the ticker above, reply with the ticker, and I'll provide a full momentum trade plan with the entry and stop loss. So let's do that. Let's do CET. Let's do TGL. So the current price is $60. Massive jump in the pre-market. The average volume is 2.9 million. Today's volume is 25.6 million. So that's a massive volume surge. The previous close was $25, so we got a continued momentum here. Explosive breakout from $6.82 to $60 in one session, likely news or catalyst driven. Support is $25, which is the previous close, and the breakout base. Resistance is $60, which is the current high and a psychological round number. And there are no historical levels above 60, so there's not a next resistance level here. $70 is just the next round number. And then today's volume is nearly 10 times the average, which is strong momentum. And so here's your trade plan. Entry, we're going to wait for a pullback toward 40 to 45 or a breakout above 60. Right, so we want with volume confirmation. So before we get into this, and to make sure that we're not chasing, we want either a pullback and to confirm that the trend is confirmed and respected, or we want a continued breakout to confirm the same. And once we get that, let's say, so ideally we'll want the breakout above 60. And so when we do that, that'll be our entry. 60, and then our first target would be $65. Our second target would be $70, and our third target, if momentum continues, would be $80. And your stop loss would be around $35 below the breakout base and key support. And again, at position size, you'll want to risk 1 to 2% of your account. And the summary provides a summary here. TGL is a high momentum candidate with massive volume and price breakout. Wait for a pullback or a breakout confirmation before entering. Now, this is very important, right? Because a lot of times you get alerts. Yeah, just get in here, just buy there, and just watch for this stock, right? And the agent does a good job of telling you when to enter, not just what to enter. And that's something to pay attention to, because just because a stock goes up in price does not mean that you will make money on it. And so your entry and your risk management will determine your profitability more so than the stock's price movement. So paying attention to the levels that the agent provides you and the guidance on when to enter, when to exit, what levels to watch for, those are the key things that are going to make you successful. And so that kind of goes over the momentum trading, and that's our first strategy. So our second strategy, and I'm just going to open up a new conversation here. Our second strategy is breakout trading. So I'm going to do the same thing, explain breakout trading strategies. So a breakout trading strategy is a popular technical analysis strategy that aims to capture significant price moves when an asset breaks through a key support or resistance level. Here's a structured overview. So a breakout occurs when the price moves above the resistance or below below support with increased volume. The significance of the strategy is that it indicates potential for strong momentum in the direction of the breakout. Key components of a breakout trading are identifying levels. So support price levels where buying interest, and you'll hear support and resistance a lot. So a support level is when the price level where buying interest is strong enough to prevent further decline. And resistance is price level where selling interest is strong enough to prevent further advancing. And chart patterns, common breakout setups include triangles, rectangles, flags, and channels. And then volume confirmation. High volume confirms a breakout is genuine, not a false move. Low volume indicates a fake out or a false breakout. And that's very important because in trading, you'll hear a lot about volume confirmation, and you'll use volume to confirm a trend. And use that as making sure that the market actually supports this trend. So there's three types of breakout strategies. There's a classic breakout, and that's entry when the price closes above resistance or sell when below support. And stop loss is placed just below the breakout level for longs or above for support for shorts. And then your target is measure the height of the pattern and project it from the breakout point. And so that's how you'll find your target. And then retest breakout entry. Wait for your price to break out and then retest the broken level. Enter for your confirmation. Enter after the price bounces off the retested level, and this reduces the risk of a false breakout. And then a volatility breakout. Use volatility indicators like Bollinger Bands to spot periods of contraction, then trade the expansion. Stop loss. Use average true range or ATR to set dynamic stops. Actionable steps for breakout trading are identify key levels, use horizontal lines, trend lines, or chart patterns. Wait for the breakout, and this is important. Wait, and that's putting a lot of emphasis on that. Confirm with a strong candle or increased volume. Enter trade at the close above the resistance or below the support. Set a stop loss just outside the breakout level. Set a profit target based on a pattern height or risk to reward ratio. Monitor for fake outs. Watch for quick reversals and exits if necessary. And then five as an example is using an ascending triangle breakout. So the pattern is higher lows and a flat resistance. Entry is buy when the price closes above resistance. Stop loss is the last swing low, and the target is height of the triangle added to the breakout point. And so that just provides an example of how you would trade on a triangle. And then, you can ask it for other examples for other patterns as well. Risk and tips. So some of the risks are false breakouts, common. Use volume and retest for confirmation. Over trading. Not every breakout is tradable. Wait for clear setups. And news events can trigger breakouts. Be aware of upcoming catalysts. But also the inverse is true. News events can cause a breakout to fade. So watch for that as well. And so breakout trading seeks to profit from strong moves after price escapes a defined range. Success depends on identifying reliable levels, confirming with volume, and managing risk with stops and targets. So let's do some. Let's see if we could find some scans. Give me real time. So I scanned the top popular ones, and it didn't find any active breakout scans. And that's the key thing about the agent is that sometimes sometimes all trades are not good for all environments at all times. And that's a very important thing to realize. And this is where the over trading and the chasing comes into play, where people try to force a trade or they want to chase something that isn't actually there, instead of accepting that it's not there, it's not a good time for it yet, and then just simply not making a trade. You do not always have to be in a trade, and this is a great example of that. So since we didn't find any breakout trades in our scans this morning, at least not in the mega caps, let's move on to our reversal trading strategy. We're just gonna kind of do the same thing. Explain the reversal. So reversal trading strategies aim to profit from price movements that change direction after a trend or a strong move. Traders look for signs that a stock, currency, or other asset is about to reverse its current trend, either from bullish to bearish or vice versa. A reversal occurs when the price direction of an asset changes, typically after a sustained move up or down. Reversals can be short term or long term, depending on your time frame. And so, some key reversal patterns and indicators. Chart patterns are a big one. Double top, bottom patterns. Price forms two peaks or troughs at similar levels, signaling a reversal. Head and shoulders or inverse head and shoulders. Classic reversal patterns indicating a change in trend. And falling and rising wedges with the price narrows, often preceding a reversal. And then some technical indicators that people use are RSI, which is the relative strength index. Readings above 70 are overbought, and below 30 or oversold can signal reversals. MACD crossovers can indicate momentum shifts, and stochastic oscillators, overbought and oversold readings, suggest potential reversals. Also, candlestick patterns. Some of the main ones are hammer and shooting stars, which is a single candle pattern that often signals reversal, and then an engulfing pattern, which is bullish, which can be bullish or bearish. Engulfing candles can mark turning signals or turning points. So some popular reversal trading strategies is fade to move. The concept here is to enter a trade against a prevailing trend when signs of exhaustion appear. Short a stock after a rapid rally with overbought RSI, and then support and resistance reversals. So trade reversals at a key support or resistance levels. Example, buy when the price bounces off a major support zone. And then divergence trading. And the concept here is to look for divergence between price and indicators. Price makes new, but like an example is the price makes new highs, but RSI does not. Example, bearish divergence signals a potential reversal down. And then as always, risk management. We're always going to talk about risk management. It's not so much how you win, it's how you lose that's going to keep you alive, and that's going to keep you profitable. And it's kind of like the old adage, offense scores points, defense wins games. It's the same thing with trading. Yes, profits make profit, but losing well is what keeps those profits in place. And so use stop losses. Place stops just beyond the recent highs or lows to limit losses if the reversal fails. Wait for confirmation. Don't jump in on the first sign. Wait for confirmation. Examples are a break of a trend line or a strong reversal candle. Size positions carefully. Reversals can be volatile. Use smaller position sizes if uncertain. An actionable example is suppose a stock has rallied for several days and the RSI is above 75. You spot a bearish engulfing candle at resistance. A reversal trader might enter a short position with after the candle closes. Place a stop above the recent high. Target the next support level for profit. And then there's some resources for further reading. And then the summary is reversal trading strategies can be profitable but require discipline, confirmation, and strong risk management. They work best when combined with technical analysis and clear entry-exit rules. If you want to see real chart examples or scan for current reversal settings for setups, let me know. So let's scan for current reversal setups. We got some action, folks. So current reversal setups. Amazon. We got two bearish chart patterns and a bullish chart pattern on Amazon right now. And this is very important because multiple chart patterns can occur on the same stock at the same time. And this is very, very important to know. And so let's go through this because this is interesting. So for Amazon, we got a head and shoulders. We got a confidence of 0.8 or 80%. Double top confidence is 0.95 and the double bottom is 0.95. So RSI is near oversold. And so it's definitely been bearish. The 20-day SMA is 232, so we're below the SMA. And so support levels is 225. And so we are near a support level here. And the resistance level is 232 is the SMA, and then 240 is the double top zone. So, you could do this bearish, you could do this bullish, and so if you're bearish and you want to do a trade setup off of that double top or that head and shoulders, then your entry is going to be below 225. Your target is going to be 215 and your stop is going to be 232.60. And if you're bullish, then your trade setup for that on that double bottom is going to be entry above 232.60, target is 240, and your stop is below 225. And so, and here's the agent saving the day again. Use tight stop loss due to conflicting signals. That's very important. Like I said earlier, you can have conflicting signals. And so use tight stop loss due to conflicting signals, both bearish and bullish patterns present. And you'll see that a lot. And, it's a very common thing. And so the second one we have is Tesla. Again, we got the double top and bottom. And so the confidence is the same on both. The RSI is 65 and the 20-day SMA is 423.07. And so the support level here is 423. And so we're well above support. We're at resistance right now at 455. And so our bearish trade setup is going to be an entry below 440. That's going to give you some time to validate the trend, right? Just make sure that it's actually going to come down first before you enter. And the target is going to be 423, and we're going to put a stop at that high of 455. And then for the bullish trade setup, we're going to do an entry above 455 with a target of 475 and a stop below 423. And then on Microsoft, we have a double bottom, which is bullish. Microsoft has had a massive sell-off lately on news of product resistance. And it's sold off. I think it dropped maybe about $15 in the past week or so. And so the confidence on this double bottom is a 0.95. The RSI is 34, it's way oversold. The 20-day SMA is 491. And the key levels of support is 470, resistance is 491, which is the SMA. And so your bullish trade setup here is going to be an entry above 491. So we're just going to confirm that it's going up. And then your target's going to be 505. And your stop is going to be below 470. And so no major stocks showed this bullish reversal pattern for head and shoulders. And so summary and actionable highlights here. Actionable insights. So Amazon and Tesla show both bullish and bearish reversal patterns, trade with caution, and confirm direction. Microsoft offers a clear bullish reversal setup with a double bottom and oversold RSI. Use stops and size positions carefully due to pattern conflicts and volatility. If you want deeper volume analysis, options, setup, or real-time price confirmation of any of these, let me know. And so that's that's how reversal trading works, and you can get deeper into volume analysis and all those things for confirmation, and go down the rabbit hole with the agent on that. And so that covers your reversal trading strategies or your mean reversion strategies. And so the next strategy that we're going to go on is scalping. So we're going to just do the same thing. Explain scalping strategies. So scalping is a short-term trading strategy focused on profiting from small price movements, often executed multiple times throughout the trading day. It's popular among active traders who seek quick gains and are comfortable with rapid decision making. So if you're a person who gets analysis paralysis, scalping may not be a strategy for you. But if you are quick and decisive, then scalping may be a good opportunity for you. And so the key principles of scalping is time frame. Seconds to minutes per trade. Profit targets are typically small, often 0.1 to 0.5% per trade. The volume is a high number of trades daily. And so if you have a small account, where you have to worry about pattern day trading, you may want to be careful scalping. And so risk is, tight stop losses, small position sizes. And, so here's some common scalping strategies. Market making strategies. And how it works is place simultaneous buy and sell limit orders around the current price. The goal is to profit from the bid-ask spread. Best for highly liquid stocks or ETFs. And then momentum scalping is entering trades when a stock shows strong momentum after a news event or a breakout. Indicators include VWAP, RSI, MACD, and volume spikes. The goal is to ride the momentum for a few cents, then exit quickly. So typically these are for micro cap, small cap stocks. They can be used for larger cap stocks too, but those require more capital and a higher risk. Range scalping is identify a tight price range and buy at support, sell at resistance. Indicators used for this are Bollinger Bands and support and resistance level. And the goal is to profit from predictable oscillations within the range. Order flow scalping. Analyze the order book and tape or level 2 data for large orders or imbalances. Goal is anticipate short-term moves based on supply and demand shifts. And so some tools that are used and some indicators here are level 2 quotes, which show the market depth and order flow. VWAP for trend confirmation. Moving averages for short-term direction. Bollinger Bands for range trading, and time and sales tape for spotting momentum. And risk and tips is high transaction cost. Frequent trades mean more commissions and slippage. Usually with stocks, there is no commission, but there is slippage depending on your brokers. A lot of brokers use slippage to compensate for the loss of brokerage fees on stock trades. So be mindful of that, who your brokerage is and what their slippage looks like. Discipline. Stick to your plan and don't chase losses. Fast execution needed. Use direct access brokers and hotkeys. Avoid illiquid stocks. Stick to high volume tickers with tight spreads. Actionable insights. Practice on a simulator before risking real money and test your strategy. Set strict stop losses. Never risk more than you can afford to lose. Track your trades. Analyze performance to refine your approach. Focus on liquid markets, S&P 500 stocks, major ETFs, or Forex pairs. Scalping is not for everyone. It requires speed, discipline, and a clear plan. If you want to try it, start small and track your results. So let's see, scan for scalping opportunities. See what this gives us. So the scalping scan methodology here. So scalping opportunities are typically identified using very short-term price patterns, high liquidity, and volatility. Since scalping is not based on classic geometric chart patterns like head and shoulders or wedges, but whether micro movements, order flow, and volume spikes, here's how I approach the scan for scalping setups. Scalping scan methodology, pattern focus. Look for micro breakouts, tight ranges, and momentum bursts. Use chart pattern scanners for short time frames like the 1 minute or the 5 minute. Volume and volatility. Identify stocks with sudden volume spikes and high intraday volatility and liquidity. Focus on top movers and high volume tickers for tight spreads. So the next steps, I'll scan for micro breakouts and range patterns on popular tickers using the 1 minute and 5 minute time frames, and then top market movers for high volatility and volume. And so it didn't find any micro breakouts on the large caps, but it did find some top gainers, and so looking at these top gainers here, it provides some actionable scalping insights. So focus on top movers like CETX, TGL, FULC, WVE, TWG, BDRX, and are showing explosive moves. These are prime candidates for scalping strategies. Use momentum scalping, buy on volume spikes, sell quickly, or range scalping, buy dips and sell pops within the move. Again, risk management, we're always going to throw risk management out there every single time. So you're going to set those tight stop losses, 0.5 to 1% below entry. You're going to use small position sizes and quick profit taking 1 to 2% targets. Next steps, monitor these tickers for sudden volume surges, quick price reversals, tight bid-ask spreads for fast execution, and use level 2 data and times and sell for order flow confirmation. And so let's do give volume. So doing a quick volume analysis here on each one of these, we're going to see that all of these have a massive volume surge that are far above the average, and that's what makes them viable candidates for scalping. Is because we have a massive volume surge, we have a sudden increase in liquidity, meaning that you're going to be able to get in and out of these. And that's an important piece. And now, whether these hold or not is to be seen, but you'll be able to see that, for CTX, massive volume spike today, indicating strong momentum and liquidity. For FULC, the volume doubled today, supporting the move. And then for WVE, we got steady elevated volume all week. And then for BDRX, the volume exploded today after a quiet week. So just out of nowhere, all of a sudden, it just blew up. There's probably some news catalyst or something in there. And so the best candidates it's recommending are CETX, TGL, and TWG with the highest volume spikes and the most volatility. Enter on volume surges, exit quickly. Risk management, use tight stop losses, below 0.5 to 1% below entry, and avoid holding through reversals. And then the scalping risk reminder. And so that breaks down the scalping and how to analyze the volume and figure out which one of these are the best for scalping. And the agent makes that very quick and very easy for you. Just saves you hours of research and staring at charts and looking at news catalysts and searching 30 different sites and and all this stuff, where about time you get done doing your research, the move has already happened and you would have lost out. But the agent made that very quick and efficient for you, because scalping is a very quick and efficient strategy, and you don't have time to be spending hours doing research. You need decisive insights, and the agent does that for you. So that's our scalping strategy. Let's move on to our final strategy, VWAP. So we're going to do the same thing. Explain VWAP strategy. So VWAP strategy explained. First, what is VWAP? VWAP is the volume weighted average price. Is a trading benchmark that gives the average price a security has traded at throughout the day based on both volume and price. It's widely used by institutional traders and algorithmic trading systems. How VWAP is calculated. The formula is cumulative price times volume divided by cumulative volume, where price equals the typical price for each trade, often the average of high, low, and close. The volume is the number of shares contracts traded. And so, VWAP strategy basics. There's three basics here, which is your trend confirmation. Above VWAP indicates bullish sentiment. Price is trading higher than the average. Below VWAP indicates bearish sentiment. Price is trading lower than the average. And so that's pretty simple and straightforward. Entry and exit signals. Buy signal when the price crosses above VWAP, especially with strong volume. And the sell signal is when the price crosses below VWAP, especially with strong volume. And in the previous strategy, I showed you how to do the volume analysis. It's just a simple question to the agent. Support and resistance. VWAP often acts as intraday support and resistance level. Price may bounce off of VWAP or reverse near it. Institutional use. Institutions use VWAP to exchange large orders without impacting the market price too much. They aim to buy below VWAP and sell above VWAP. Actionable VWAP strategy. So intraday mean reversion. Buy when the price dips below VWAP and starts to revert upwards. Sell when the price spikes above VWAP and starts to revert downward. And trend following is go long if the price stays above VWAP for a sustained period. Go short if the price stays below VWAP for a sustained period. And then you can use VWAP as a filter. Use VWAP to filter trades. Only take long trades above VWAP, short trades below VWAP. And strategy tips is works best for intraday, 1 minute and 15-minute charts, combined with other indicators like RSI and MACD for confirmation, and avoid trading solely on VWAP crossovers. Look for volume confirmation and price action. So an example, and this is just, example data. So suppose Apple is trading at 175, the VWAP is 174.50, price crosses above VWAP with increasing volume, that's a bullish signal. You enter a long trade, set the stop loss just below VWAP. And so the summary is VWAP is a powerful intraday tool for identifying fair volume, trend direction, and potential entry exit points. Use it for volume and price action for best results. And so you would look for that VWAP in your broker, in your level 2 data. If you're using Thinkorswim, if you're using Webull, and you have access to that level 2 data within your brokerage firm, you can use that to find what your VWAP would be and set up trades there. So let's see if we can scan trades. Yeah, so typically what you need is you need to go into your broker, look at your level 2 data, and figure out what that VWAP is for that stock, and looking at that and setting up your trades and your entries and exits based on that. But yeah, the agent shows you how to calculate that, how to find that, where to set your entry and exit levels. And so let's see if I So we got VWAP trade analysis. So telling you how to do the calculation and how to set it up. So your bullish setup is the price that crosses above VWAP, which is 278, and your bearish setup is it drops below VWAP, which is 278. And so right now it's slightly below. It looks like that was the close, and then the entry, and then the pre-market might be 281, and we got some good trade, or we got some good volume here, averaging around 36,000 per minute. And so it gives you the setup for the VWAP cross for bullish and bearish, and then it provides you with good risk management steps, and summary and next steps. And so the agent can provide that information for particular tickers, in particular time frames. You can give it different time frames, or like I mentioned earlier, you can look at your level 2 flow for your broker, which in day trading may be the best option because it is real time and it is a lot faster. And it can allow you to set those trades right there from the level 2 workflow. And so for day trading, that may be a more advantageous method of using the VWAP strategy. So that covers our 5 day trading strategies for our deep dive into stock day trading. Let me know what you think in the comments below, and like and subscribe. Thank you.